Hello, this is Compound Interest Stock Guide. Today in this video, I'm going to go through Supreme Fire ticker, their financials for this quarter, Q2 2020, as well as the financials for Aurora-CANNABIS. So stay tuned if you want to get the nitty-gritty, the down low on how these companies are operating. I'm going to give it to you legit, so stay tuned. If you're new to the channel, hey, don't be shy, subscribe, make sure you hit the like so more and more people can be more informed on how these financials are so they actually know what's going on. So I appreciate that. I want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you do your own research, due diligence, and you like the investments you're pursuing. Alright, so yeah, Aurora did okay today in the markets, but yeah, I mean, I wasn't impressed with their financials. So, you know, as far as buying it today, I think it's on weakness. I don't know. I think there's a lot more risk for the downside. I'm gonna say that. I mean, who knows? I don't control the markets, but you know, as far as it could go, Aurora-CANNABIS, their stock could really get decimated in the coming weeks and months potentially. But we don't know. You know, it's all set up with what the banks are going to do and the institutions if they want to keep the stock up or if they want to completely destroy it. I mean, the reason why I say that is because you can see that with CanTrust, right? Like, CanTrust should be realistically worth like 2 cents or 5 cents, right? And somehow it's still at a reasonable level. I haven't checked it in a while, but I mean, last time I looked, it was like somewhere around $1 or $1.50, and it doesn't make a lot of sense. So the same thing can happen with Aurora-CANNABIS. Yes, they're a leader in the space, but their debt and their net losses are just tragic. So anyways, I want to get to Supreme. So they did enhance cost structure and near-term revenue expected to drive. So they're talking about the legalization 2.0 products that they're coming. I'm not going to say every word because I've already kind of gone through this, but I'm using this as just the data, just to check it out, things that I might forget as far as Supreme. I just looked at this briefly, but I did remember that they said that they want to have 7 million tinctures in for 2020 for at their Blisco facility. So that's in BC, and they're doing their pre-rolls. The Sugar Leaf brand will address a mid-tier price point and more convenient and accessible consumption experiences. So, and then they're at 7 Acres Premium, but you know, I can't cover this all because I just don't think Fire is really on my radar. I'm just gonna do it because there may be some people that thought about Fire and they just reported, and I was like, all right, I'll do Fire as well. I'm also gonna do a report card for them, and so yeah, net revenue 9 million, gross margin 2.6, so really that's close to about 25, 26, 27%. Profit margins not leading profit margins for sure. Net loss is the big wower that I don't like at all. I've become very how should I say, very you know, I have no problem criticizing these companies that are doing insane net losses because the market won't accept that. The institutions will not accept that. So it's time for these companies to step up or step down and get decimated and be destroyed and be eliminated. Sorry, but that's the reality. Net losses after taxes minus 17 million. Adjusted EBITDA 10.4 million minus 10.4 million, and they say they have $48.7 million in cash, and their diluted loss per share was 5 cents. So I mean, last time I looked, they were like 40 cents, so they're really running at about a -8 PE ratio. So yeah, nobody wants a negative PE ratio. What's really interesting is they only sold 5.7 million in the rec sales, and they said that increased from 46% in Q1 to 62% in Q2 2020. Yeah, so 46% in Q2, so they had more revenue, but they have less revenue overall. Last quarter was around 11 million, and they did a quarter before that was 19 million. So they're having their revenue. So it's just showing that they're really having a problem with their whole B2B, as well as their whole strategy as far as trying to sell premium cannabis. You know, not many people want to spend $15 a gram to buy FIRE-CANNABIS. I mean, maybe people have some like respect for John Fowler, and they're loyal to that, even though he doesn't even work there no more. But I mean, yeah. So what's really interesting as well is their average selling price for the rec market is $539, but their wholesale is very bad. I'm just gonna look exactly where it says. Where was it? I thought it was like 350. Okay, 5.7 million. Oh, here it is. I missed it. So it says 326 per gram for wholesale. That's terrible. Terrible. But, you know, that's the way the market's going as far as wholesale cannabis goes. But, yeah, that's why you want to be a prominent rec brand, as well as get into EU GMP, as well as the medical market. If you got a lot of medical patients and you have a really low SG&A, then you will be able to excel in this market, because all these companies are basing their operations on running at, like, say Fire is trying to run at, like, I don't know, 250 million a year in sales, so they think they can be profitable at that level. And then you got like Aurora, theirs is terrible. I'm gonna get into their financials. We're gonna switch over, but I'm just gonna say, is they're thinking, oh well, we gotta. I mean, they're running their ship as if they are a 1.5 billion revenue per year player, and they're not. They're not. They just did a lot lower than that. So let's get into this AURORA-CANNABIS. AURORA-CANNABIS. Alright, so let's do this. Look, I don't really have fun reporting on AURORA-CANNABIS because I just think they've been a big pump and dump for a long time. They promise way too much, and they've really killed the liquidity in the sector. Them and Bruce Linton and, you know, companies like CanTrust have really taken all the liquidity out of the market, because they took all the money from the banks and investments, institutions, and all that stuff like that. And, you know, they haven't been able to meet their expectations. So they promised way too much, and the market gave them too much of a like a leg up, that they're way superior, that they could do no wrong. And that puts them at an easier ability to just get decimated. But, you know, that's had a problem for other companies trying to come up in this space, because they didn't have all that liquidity that Aurora and Canopy had. So I don't really have much respect for those companies. I mean, I do think that AURORA-CANNABIS, I'll buy their products, their San Rafael products, but as far as their business goes, it's just trash. And I've been saying it for a long time. You know, probably if I would have kissed their ass and cheerleading them, I'd probably have 10 to 20 times more subscribers than I do right now. But I just don't care. I don't care. I just want to be real with the people. I want to say what's up. You know, I want to speak my mind. I mean, companies that could have used that money in a lot better ways. You know, if they had all the capital that AURORA-CANNABIS has, some of these other companies could have used it and really excelled in the marketplace a lot more than what Aurora has used it for. So, I mean, yeah, they're in a lot of countries and all this stuff, but I don't know. Okay, they got cash and cash equivalents, 156 million. Restricted cash, 45 million. Accounts receivable, 82.2 million. Income taxes receivable, 5.2 million. Marketable securities is 26 million. Yeah, that's what Canopy, they have a lot of marketable securities, but they're probably going to have less than $1 billion in cash tomorrow. So, hey, I know this stuff before because I observe the markets and I understand this stuff at a very high level. But biological assets is 45.6 million. Inventory 205 million. So that's good. They got lots of inventory. So, I mean, if they can just ship it off, then that could add to their revenues. I mean, but are they going to be able to? I mean, that's the question. Are they going to be able to? Because it's just showing they had to send back $12 million in returns and, you know, and they had to lower their prices. So, unless there's a lot of opening up in Ontario and other provinces for more stores, that inventory is not a great thing to have your assets at. Your current assets, these are their current assets, right? So they're in their property, plant, and equipment is 1 billion, and derivatives 43 million, deposits 10.4 million, loan receivable 3.3 million, investment in associates and joint ventures 69.68 million. Intangible assets 503 million, and goodwill of 2.4 billion. Yeah, so now they have about 770 million off of their goodwill. So they have less current asset, like total assets, than they had the previous quarter, and they've written down the goodwill, which it's in this thing as well as the other reports. But I don't know if I'll see it again. I'm just kind of want to get to the gist of it and summarize it. Liabilities, accounts payable and accrued liabilities less than last quarter. Well, that was 2 quarters ago, June 30th actually, so that's a little ways away. Accounts payable 125 million, deferred revenue 6.1 million, convertible debentures 30.6. So they just did a lot of the current convertible debentures recently. I think it was like at 260 or so, maybe 280, something like that. It was based on a 10-day VWAP, I believe. And then so those are off the books, but more current shares, right? So loans and borrowings 27 million, contingent consideration payable 24.6 million, and convertible debentures on this is another convertible debentures, right? So this isn't the same as that other one, and this is 271 million. So I don't know when those are due, but that's not a good look for them to have 270 million in convertible debentures. Loans and borrowings 273 million. Ooh, I don't like that either. And that's, I think, from the bank, the BMO. Derivative liability 8.47 million. Deferred tax liability 81 million. Total liabilities 848 million. So when I last heard about this operation stuff and just the EBITDA covenants, it was based on about 0.2. Sorry for the dogs in the background. I got some crazy dogs that live below me. They try to pretend like they're wolves and stuff, but they're just like little chihuahuas pretty much. Well, they're a little bigger than a chihuahua, but yeah, they just try to act tough. But anyways, total liabilities 848 million. All right, so you got the total assets of 4.67 million, right? So let's do the calculator, because it needs to be, their debt needs to be below the their assets, like by 0.2. So liabilities, like I don't know how they're, I think it's, I'm gonna say it's all the debt, because I think the liabilities is all debt in a sense, something that they owe. So 848 divided by 4.4671. Okay, so that's just under 0.2, right? So they always have to have their assets higher than 0.2, right? So that kind of puts them in a difficult position that with this goodwill, because I mean, they had to write this down or whatever. Like, I don't know who made them write it down. It was the accountant or something like that. But the bank's saying that it needs to be above, below 0.2. So their debt to equity ratio, like the assets, have to be below 0.2. So these liabilities always have to be 20% of whatever this is. So it's at 18%, but if they do some more debt or anything like that, like that's really putting it close. That's why you're seeing so much pressure on Aurora-Cannabis, and it can't have any legs, right? It's hard for it to go up because this is like the BMO, or I think, told them that, and they also shrunk their liquidity and told them they can't take as much money from this certain thing. There was like 125 million that they had before, and they can't have that anymore. I don't know if it's here, but anyways, let's move along. Shareholder equity deficit 1.58 million. Share capital 5.4 billion. So their total equity attributable to Aurora shareholders is 3.84 billion. Their total equity is 3.8 billion, and total liabilities and equity. So liabilities and equity. Yeah, so their total liabilities and equity equals this. So equals the same as that. Yeah, I don't know. It doesn't look very good. So now let's do the revenues. All right. So this is 63.667 million. All right, that's great. But they only actually receive 56 million because they take off the they take off the excise taxes. So then they're only left with 56 million, right? Which is, government sucks. They get their greedy hands in the business and make it tougher for these companies. But that's where you have to start lowering your SG&A, and you should have been doing it 6-10 months ago. You should have been doing it 6-10 months ago, not now. Now is too effing late. So anyways, cost of sales was 33 million. So the gross profit was 22.8 million. That's not that great. A year ago they did 54 million and they had 28 million. So they had changes in fair value of inventory sold. So they say their gross profit is 29.9. Listen, fair value of inventories, unrealized changes on. Yeah, I mean, just inventory doesn't matter that much. I mean, if you can't sell it all because the provinces won't take it or they're returning it. So that's really the reality of things. General and administration was just terrible. That's more money than their actual revenues are for the quarter. I don't know about you, but that makes literally no sense how you can be profitable if your general and administration are more higher than your net revenue for the quarter. So this is why the CEOs and guys like Ken Badley, who are full of shit, should have been booted a long time ago, because that's just not okay. So sales and marketing 29 million, acquisition cost 2 million, research and development 6. I don't have too much of a problem with the research and development. I think if they do get a good pill or something like that, or some type of patent on the market, I think that's good for their business. But then, I mean, when's it going to come to manufacturing that product? Anyways, let's move along. Depreciation and amortization, 20.8 million. Share-based compensation. Yeah, of course, you got to pay all these crooks, right? You got to pay the Cam Badleys. You got to pay the Terry Booth. You got to pay all their friends and family, right? Of course. So that's why the loss from operations is 119.6 million. But Robinhood investors, they all know that, of course, that's okay, right? It's okay to make a $119 million dollar loss a quarter. It's perfectly okay, right? No problem. It'll be okay, guys and girls. It'll be okay. Everything will just work out. It's like Trudeau says, the books will just balance each other, right? So let's move along. Other expense income net, 168.8 million. Impairment of property and plant equipment, 51.9 million. Impairment of investment on associations. Okay, so they don't need these associates anymore, so they have to pay them out. Or no, that was the impairment of investment. So because they invested in their growth as people in the business, but they're no longer there because they hired way too many people because they thought they could run a $1.5 billion business in Canada, even though it hasn't even been that for the whole year. But let's move along. Impairment of intangible assets, 158 million, 0.6. Impairment of goodwill, 762.2 million. Terrible, but they have to do it. Goodwill is trash, and that's just the reality. 1.2 billion loss before taxes. Ooh, let's get this great freaking number. Let's get so excited. Let's buy more AURORA-CANNABIS, guys and girls, because this is just such an amazing quarter. Loss before taxes, 1.33 billion. Woo, let's go have a drink, because this is just so freaking amazing. All right, net loss, 1.305 billion. Woo, I'm so happy. What a great quarter, guys and girls, at AURORA-CANNABIS. You guys just crushed it. I know when you guys were doing your speaking and all that stuff like that, you were mentioning that you were going to have over $1 billion in net losses. I know that's what you guys were telling all your future investors, that, right? Because that's what you would have been doing, of course, right? All right, let's move along. Okay, so let's see this basic net loss. The basic net loss per share is 1.18. That's just awesome. That's just awesome, guys and girls. So they're running at about like a minus like 1.75 PE ratio. The lower you get of the PE ratio, it just gets just bad. The lower the net loss per share, especially when you have a stock the price of Aurora that's only $2, that just looks really bad. If your stock was like $200 and you did a net loss for a quarter of 1.18, it wouldn't look as bad because your stock's at $200. So I'm sure other quarters you were doing lots of like nice EPS of say like $2 or $5 per share. But that's just the reality of things. I kind of knew this stuff. I haven't been investing into AURORA-CANNABIS for these simple reasons. They are not close to being profitable. They are not. That is just the reality. Supreme Cannabis is going in the wrong direction as well. And it's not a good look for them either. And, that's just the updates in the market. With AURORA-CANNABIS is in a bad position. They are in a bad position. On my video, I may link it in the description, or in not in the description, but in the end screen or in a card at the beginning of the video. Is basically that they pretty much need to do about 45 to 50 million a quarter just to break even. Now, when you're looking at this, I got to take some more time. I think it even looks worse than that they need, with all their expenses. They may need to do even more than that a month just to break even. You got your debt, not the debt, but the write-downs of the goodwill. And then it was like intangible assets, I guess. So I think it was like about $1 billion. And then they also, because they laid off people, they write down that. So I don't know the exact. I haven't done the math for there. I could do it maybe sometime later if I'm interested, but I'm not really too interested on the AURORA-CANNABIS business because they just don't seem ready to be profitable anytime soon. Until they start ripping it and start doing 60 to 70 million a month, and they do like 200 million a quarter, or they really lower their SG&A down to 40 million, and they lower their other expenses so anyways, this is an update. This is your raw uncut summary on Aurora Cannabis and Fire Supreme Cannabis, giving you the download, giving you the legitness for my viewers and subscribers that have been following me. I'm giving it to you guys. I appreciate all the support, and thanks for watching, thanks for listening. Make sure you hit the like before you go, and shaka peace, have fun in the markets, take care, and I'll talk to you guys later.